I'm John Ellsworth, CEO and founder of Success Strategies Incorporated and the creator of the Success Strategies Advantage. And today I'd like to talk to you about a very important topic to a lot of businesses that borrow money, and that is how to save up to 28% on your borrowing costs. Now that should be of interest to anyone that borrows money, but let me tell you some reasons. Reason number one, if you borrow money, first of all, I want to say you're blessed to have it. There are a lot of businesses that don't have credit availability, and I think it's important that you remember that it's a blessing to have this availability to expand your business, to keep your operations floating. We all have times where cash flow is a little bit lighter than normal, and it's important that we utilize credit wisely. I'm talking about short-term loans, also known as revolving lines of credit. That means we can pay them down, we can borrow them back on a regular basis as often as you like and as often as you have cash available. Point number two is if you have a checking account, and I think this is important to think about this, number one, the banks love you because every $100, $100,000, whatever you leave in your checking account, the banks will utilize 90% of that by law to make loans. So they make money on 90% of that money that you have in your demand deposit account. You'll see the term DDA, which stands for checking account, basically. It's costing you money. And the reason it is because you could be utilizing those funds to reduce the balance on your line of credit. And a lot of people overlook this, but I call it found money. I think it's really a neat concept. Far better for you to pay down your line of credit, as you've seen ASAP, as soon as possible. Well, that's true, but in this case it's AOAP, as often as possible. Number one, you will save interest expense by the amount you pay on the amount that you pay down. Number two, the auditors of the bank are going to love you, and I could tell you some crazy, wild stories from my banking experience as a loan officer 20 years ago. But the auditors will like you because if they see activity, paying the line down, borrowing it back, they know you're utilizing it like it's supposed to be, a revolving line of credit, not just a one-way street where they put money in your account and then they call that a permanent injection of working capital, which is not a good thing for a bank situation. They want to loan you money, they want you to pay it back and borrow back and forth, and so the auditors really will like you. Say, for example, this is a really cool part. If you're borrowing at 4% interest today, number one, I would say lucky you, that's a great rate, not far over the prime rate today. But I would suggest you do this. Whatever the dollar amount is in your checking account, you want to keep a minimum, whatever the minimum might be, to avoid any fees on checking. But think about this. If on Friday early afternoon, you paid down on your line of credit by $100,000, and if you need it on Monday or later the following week, you just borrow it back. But here's the really neat thing, my final point. You can only do this with revolving lines of credit, because with non-revolving loans, which would be real estate loans, equipment loans, car loans, things like that, when you pay those down, that money's gone forever unless you set up a new loan, which you don't want to do because, particularly on real estate loans, they can be very costly. There are title costs, there are closing costs, there are documentation fees, and you don't want to get into the expense or time-consuming process of that. But I think it's important on revolving lines of credit, if you could pay down any given balance, any dollar amount, on Friday and Saturday, that's 2 out of 7 days. If you take 2 divided by 7, you'll get 28.5%. That, a 0.285. That is a tremendous savings and something that a lot of businesses overlook. So I would say, take a good look at this, whether it's $100, $100,000, $500,000, whatever it is on your line of credit that you can pay down with your checking balance that's available to you, then please do it. I think you'll be happy with the results. Again, I'm John Ellsworth, and I thank you for tuning in today and listening. I am the founder and CEO of Success Strategies Incorporated and the creator of the Success Strategies Advantage. And I thank you for listening and hope that we can be of further service to you. Thank you very much.